Hi, my name is Rupert Pontin and I'm Head of Insight and Communications here at Brego. Welcome to a slightly delayed Brego Auto Intel broadcast for March 2026, in which we're going to have a look at what happened in the UK auto retail sector during the month, as well as a short summary of the political position and the UK economy that drove retail consumer behaviour during March. So without further ado, let's get underway. Let's go with the economic update. It's fair to say that the war in the Middle East has continued to have a significant impact on the global geopolitical position as the American administration has prolonged its aggressive action against Iran. On the face of it, little progress appears to be made, either in forcing regime change or indeed finding a peaceful end to hostilities. But unfortunately, until that happens, we are going to have increased pressure on our home economy, which is going to impact all of us. However, on the face of it, the March economic indicators look pretty stable, and they projected an impression of a pretty healthy economic position. Which really wasn't quite the case. The rate of inflation did remain stable at 3%, although we do need to remember that the data is based on activity in February, and things may not be all that they seem. So the next rate announcement is scheduled for April 22nd, and it's highly likely that the rate will have increased markedly. The bank base rate also remained the same during March at 3.75%, although as the month has progressed, the pressure of war has begun to be felt and the likelihood of another drop in interest rate has now disappeared, which is unfortunate. Now, the next announcement for the bank base rate will be on April the 30th, so we need to keep our fingers crossed for that. Consumer confidence index dropped by 2 points, not really a surprise, and that now rests at -21. And to be honest, we can expect this to get quite a lot worse during April, I would imagine, as the true increase in the cost of living is revealed. Unfortunately, due to the closure of the Strait of Hormuz, the average cost of a litre of petrol rose significantly to £1.48, and we can expect that figure to continue to rise as we go through the month of April, and particularly the longer that the Strait of Hormuz is closed, we're going to see some real shortages of fuel, and that has affected certain things that go on in the used car market as well. In addition, the average mortgage rate has jumped significantly to 5.4% for a 2-year fixed period, and this has immediately stagnated the property market. Until this rate begins to reflect the base rate more closely, then property transactions are likely to be what you would call fire sale circumstances. I guess there is no need or there is no benefit for people moving and changing mortgages at this particular time of the market. This month's message overall is pretty much the same as last month, and that is, as a nation, we must prepare for further increases in the cost of living, which is disappointing, and of course there'll be more economic hardship to come with that as well. It will be interesting to see what measures the government is prepared to take to help the public through this difficult time, if any at all. So this is what happened in the UK new car market, and this is courtesy of data from the SMMT. So we saw during March a total of 380,627 registrations, which showed a 6.6% increase over the same period in March 2025. And that had come off the back of a 7.2% increase in February. So it shows the market appears to be in pretty good form, which is a positive. It is at the moment anyway. This means that year-to-date registrations are 5.9% up on 2025, and that's higher than many had expected for this time of year. March also saw another favorable increase in retail sales with a boost of 10.1% for the retail sales, and that's off the back of 17.6% in February. And that represents a 42.7% market share, which is up 1.4 percentage points on March 2025, so pretty good. Year-to-date, this is a 40.7% market share, and that's up 1.5% on 2025. Now, fleet registrations, they were also up, but by 3.5%, and that reflects a 54.9% market share in the month, which is 1.6 percentage points lower than last March, but that's to be expected as we're seeing greater private registrations. That's good news. Year to date, it shows a 57% market share, and that again is 1.8 percentage points lower than in 2025, because that's a year-to-date figure. EV registration showed an increase of a whopping 24.2%. That was off the back of just 2.8% in February, although market share for the month was at 22.6%, which is 3.2 percentage points higher than March 2025. Year to date, EVs have a 22.4% share in comparison to 21.9% the previous month, and that is 1.7 percentage points ahead of last year, which is a step in the right direction. I get that, but it's still an awfully long way from where it needs to be by the end of the year. Plug-in hybrid up 46.9%, and that's with a 13% market share, which is up 3.5 percentage points on March 2025. Now, year to date, that's an increase of 46.5% on the previous year, which is quite significant and reflects the demand for hybrid technology as a stepping stone towards electric, perhaps. Petrol registrations were down 6.1% for the month, and the market share was 43.6%. And 3.5% percentage points lower than it was previously. Diesel down by 11.4% for the month, with a 4.9% share of the market, which is 1 percentage point down on March 2025. So looking at the top sellers, the OEMs, the top three, Volkswagen, as they were first last month and this month as well, at 7.1% of the total market. That's down from 7.9% the previous month. BMW in second, they were third last month and they have 5.6% of the market. And in third place is Kia with 5.29%. When we look at the top three sellers, the top selling car for the month of March was the JQ7 with just over 10,000 units registered. Ford Puma came in second. They were first in the previous month, and then in third place was the Nissan Qashqai. In that top 10, there were only two Chinese models, and they were the JQ7 obviously in first, and also the MG HS. So from the Chinese brands on sale in the UK, in total, they took 15.8% of the total market. That's up from 12.8% in February. Now, that figure excludes Volvo and Lotus, just so you're clear. So we had MG at 4.1%. They were up from 3.4% in February. BYD at 3.98%, up from 2.4%. And JQ at 3.16%. They were 2.25% in February. However, if you look at the Chery Group as a whole, they took 5.9% of all registrations in the marketplace, and that technically is enough to put them in second place. So that's something that we need to watch and be aware of as we go further forward. There was a really big push from the Chinese brands during March. So looking at the UK used car market, we are, as ever, going to be using the insight from the Brego Whole Market data. Looking overall, total number of adverts in the market were up by 8.7%. And that's the reality of a busy market fueled by part exchanges that have come from new car sales during the course of March. And that is a direct reflection of that. Pre-registered adverts dropped by 6.2%, which is perhaps a bit of a surprise given it was the new plate month. And some may have been expecting a push to meet targets, although they may have happened towards the end of the month to just beat those final targets right at the end. So we may well see this reflected in pre-reg adverts during the course of April. We'll have to wait and see. Trade adverts increased by 8%. Again, that further supports that overall increase in adverts driven by part exchanges through the main dealers. EV adverts were up by 11.5% off after 8.5% last month. And that is as to be expected. To be honest, it's probably been higher, but EV demand has increased significantly recently, and I'm sure you can guess why. Hybrid adverts jumped by 9.2% after 1.2% last month. There's been good demand there on the basis that this technology is seen as that little bit of a stepping stone away from reliance on fuel, and we've all got that focus on fuel at the moment, courtesy of the Middle East. Petrol adverts were up by 7.1%, and diesel adverts were up by 6.4%, completing the lineup of increases by fuel type. From a sales perspective, there was a significant jump of 14.1%. Which was a surprise for many, but then the market was spurred on by an increase in the choice of stock and very motivated sellers keen to keep the stock turning. So that was very positive. Days to sale dropped again, down to 37.6. That's a drop of 4.3, and that further reflects that busy used car market. However, EV days to sale have now fallen behind the general market, whereas they were in parity. In fact, a couple of months ago, they were quicker. And despite the fact they dropped by half a day, they are now sitting at 41.5 days to sale. And at the moment, there's little proof in the data to show why this may or may not have happened. It could be just that increase in stock. Some of the older cars with the lower ranges hanging over from the Christmas period, who knows? If you use the Brego Insight tool, you'll be able to query that in more detail. The average price of a used car sold was $16,927, and the average price for an EV came down 4% to £21,953. And that average price is continuing to come down, and we will see, I would imagine, that drop is more down to the fact that there are cheaper cars coming to the marketplace. So to summarize the Brego Auto Intel for March 2026, on the face of it, March was a strong month for both the new and the used car markets, with a 6.6% and a 14.1% increase in sales respectively. So really good, strong month. Pre-reg activity did drop away, which is good, and some will have seen that as a surprise, obviously, because it was the new plate month and people chasing targets towards the end of the month. But as we say, it is worth mentioning that this position may change during April off the back of those potential pre-registered cars done in the last few days of March to meet targets. Used EV demand improved with an increase in both inquiries and footfall at dealers. There is little surprise around this. It's been attributed to the rapid increase in fuel costs and people having an irrational fear of being stranded without petrol or diesel and therefore no transport. That said, we've got to welcome any boost to the popularity and the adoption of EVs, so we can see that as a positive, even if it is driven off something a little strange. The wholesale market has been pretty strong, and there's been plenty of stock coming to the auctions and remarketing channels, which has given dealers plenty of choice for their forecourts, and they've been able to buy vehicles and stock themselves accordingly. Commercial levels at the auctions were pretty good, and generally speaking, the vendors were happy with the pricing and the service that they were getting. Finally, there were 21,591 used Chinese cars advertised in March 2026, and that represented 2.4%. That's a 0.1% increase in the total volume of vehicles on sale in the market. Just as a note, that does not include Volvo product, which is seen at the moment to sit outside, nor Lotus either. So I hope you found this another valuable review of the UK automotive market. And if you want or you need more detail, please read the Brego Monthly Car Insight Report. Now, that can be found on the LinkedIn page and also on the Brego website. Or, of course, you can just reach out to me and I'll send that across to you. We're now also posting insight and updates on our YouTube channel, which is called Brego-Official. And in addition to that, we also now sponsor the Dealer Way Dealer Pod weekly podcast. And we've also teamed up with Motor Trade Radio as their trade values partner, giving a monthly summary of used car activity in the UK market. Finally, I just want to reiterate that if you want to improve your market insight and understanding of the nuances in today's UK auto sector, then you need to speak to the Brego team. Andy, Safi and Nick would be delighted to show you how the Brego pricing and market data will help you to improve not only your understanding of the market, but ultimately increase your profitability. And that's the important thing. Remember, they don't bite, they're here to empower you. Thank you and see you soon.